The circular flow of income, revision notes for AS/AQA Economics. The business cycle. If you don't know about the business cycle, this diagram will help to explain the meaning of it and the concept of it. So we have our trend growth. This is the predicted GDP each year. So it's the trending of the GDP. It's approximately around 2.5% each year. And this is our actual GDP. So as you can see, it's never directly on the trend. It's either below or above, which is fluctuating. On the sides we have our GDP and real national output, and along we have time. This here is what we call a negative output gap. It occurs when GDP is below the trend rate of growth. It's also known as a recession or a bust. Here we have a positive output gap, which is also known as a boom, where GDP is above the trend rate of growth. It's important to understand that all economies have fluctuations in their level of economic activity. It's also important to understand what the macroeconomic equilibrium is and the main concepts of it. Why money is constantly through the actual economy, and how to apply the circular flow of income models to different scenarios. When we work, we gain money from firms as income. We then buy things. The money paid becomes someone else's income. The money paid for the items goes back to the firms. The firms use this money to pay wages again, and so on. We can see that there's a clear loop or circle in the flow of money around the economy, which gives the name the circular flow of income. In order for easier understanding, a more visual approach to representing the circular flow of income, an economic model can be drawn. An economic model is just the use of a model to show complicated economic situations clearly by the use of visual representations. Let's draw a simple circular flow diagram. So we have our firms and our households. Here we have the money flowing anti-clockwise. So, firms pay their workers with wages, which goes from the firms to the households. The households then buy products, and the money goes back to the firms. We have the goods and services and the land, labour, capital and enterprise. Payments for goods and services go from the households to the firms, let's say 30 million. The firms then pay rent, profit, wage and interest 30 million to the households. The previous model that we just studied is very basic, and other elements need to be taken into consideration. Within the flow, money can leave and enter. Money entering the flow are called injections, and money leaving the flow are called withdrawals. But what do injections and withdrawals actually include? If we are injecting into the economy, we are putting money into it. So investment spending on capital equipment is injection into the flow. If we are withdrawing money from the economy, we are taking money out. So by saving money, we are taking money actually out of the flow. Let's add these to the diagram. So we have our injections into the firms and injections into the households. We also have the withdrawals from the firms and the withdrawals from the households. Here we have investment into the firms, represented by an I, and saving by the firms, represented by an S. We also have savings by the households, represented by an S, but we don't have investment into households. Alongside investment and saving, there are also other injections and withdrawals. Government expenditure is an injection of capital or transfers of money into the economy. Taxes take money out of the cycle for government expenditure. So let's add these to the diagram. We now have investment in government expenditure, which are represented by the I and the G, and we also have the savings and taxes by the firms and the households, represented by an S and a T. The circular flow of income's equilibrium occurs when planned injections equal planned withdrawals, or investment plus government expenditure equals savings and taxes, or basically aggregate demand equals income. However, the models studied so far were based on closed economies, where there is no international trade. Investment and savings is a two-sector economy. Investment, government spending, savings and taxes is a three-sector economy. A four-sector economy also includes exports and imports, This is also known as an open economy. So let's add these to the diagram. We have our investment, government expenditure and exports, savings, taxes and imports for both firms and households. Also remember that imports is represented by an M because we also have the I represented by the investment. So it's important that you put an M instead of an I for imports. The circular flow of income is an open economy occurs when planned injections equal planned withdrawals. Investment plus government expenditure plus exports equals savings plus taxes plus imports. If the sum of injections equals withdrawals, then national income is at its equilibrium. If injections are greater with withdrawals, then the GDP is rising. If withdrawals are greater than injections, then the GDP is falling. Consumption in the circular flow of income is very important. If people are earning but not spending, a disequilibrium will occur. So what factors actually influence aggregate demand? To name a few: income. The amount of income people get influences the amount of disposable money we have. And disposable money is just the amount of income we have after all taxes are paid. The amount of inflation. Higher inflation means the value of money is less, so less can be bought. Lower inflation, that means money is worth more, so you can buy more. Interest rates. Higher interest rates mean the cost of borrowing is more expensive and the reward for saving is greater. When talking about the circular flow, it is actually important to make sure you talk about the effect on real national output and GDP upon the changes in injections and withdrawals. Don't confuse the investment definition with the standard definition. In economics, investment is the spending by firms on capital equipment. Capital equipment can include machinery, for example, or infrastructure. Also, use a circular flow diagram to explain your answer instead of just writing about it, but make sure you explain your diagram. Definitions for this video. Here are some definitions, just in case you didn't know what they meant. Questions. Time to question yourself and stretch and challenge. So, what are the two components of circular flow of income? And then the next three questions ask you to do the different sectors. Question 5. What changes derive from a change in injections and withdrawals? And what is needs for the circular flow of income to meet its equilibrium? Topics for further study could include how aggregate demand can be controlled, such as macroeconomic policy instruments, which include fiscal policy, monetary policy and supply side policies. You could also research into the balance of payments on the current account to help your understanding further of the circular flow of income. Thanks for watching.